What's up, YouTube? It's Inner Eye Forex here again. Welcome. How you guys doing? This day, the 6th day of June 2023. How's the market been going with you guys? You're welcome. It's a quick analysis we want to do. It's like flowing with the market, and this Tuesday we're going to flow with the market, and we're going to see the opportunities that are bound for traders this day and the coming days in the forex market. Okay, we're going to analyze 4 pairs. We're first of all going to start the analysis with the DXY, which is the dollar index, after which we'll go into Aussie dollar, Euro dollar, and GBP US dollar. So yeah, without wasting much of your time, without further ado, let's dive straight into the chart. But before that, I want you to subscribe to the channel, hit the post notification bell, like this video and this content, and comment. This is our first video for this channel, and I trust that we are going to have much more educational video like this that's going to help traders, especially young traders and newbies in the forex market, to gain consistency and understand more how to make more profits and up their game in the market. So without further ado, let's dive straight into the chart. So this is already DXY, the dollar index, and we're going to start our analysis from the higher time frame. So quickly, this is a naked chart. Okay, so we're gonna start from the monthly to see how the market is flowing from the monthly. This is like a top-down analysis. We're going to see how the market has been flowing. So just looking at this, we can easily see that the market has been on an uptrend for the longest. Okay, the market has been on an uptrend. You can see the market is just going up. Okay, but this is the monthly. We don't trade from the monthly. We just get to the monthly and the higher time frame to get the overall perspective of the market. So dollar has been on an upside for the longest. So we'll go to the weekly to see how we're going to see levels of support and resistance, key levels which we're going to plot, and yeah, it's going to help us to know what we need to expect in the coming days. So this is the weekly chart of the dollar index. This is the weekly chart of the dollar index weekly chart, and we're going to plot our key level. So while plotting our key levels, we just try as much as possible to zoom out to get a better picture of the overall flow. And also I don't use the candlesticks to plot my key level. I prefer the line chart. The line chart is gonna help you to see everything. So I just get out my triangular tool and let's just plot. You can see this level. There's been a strong level for some time, and the market is about trading currently around that level. So this level has been strong. We're going to clone this and look for another level that is closer to price. Okay, this level seems to be another good level. You can see there was rejection, broke, respected. You can see, yeah. So I just want to use these 2 key levels from the weekly chart now, because this is where price is trading at the moment. Okay, let's do one above. let's do one above. Okay, let's do this here, because there was a rejection above. When the market was going up, it encountered a major stop here, and there was kind of a rejection. So let's just leave this for now and then go back to the candlestick. Then we're going to go straight now into the daily chart. Yeah, in the daily chart, this is where I spend most of my time in the daily charts before I begin to see bias for the day and for the week and for the coming days. I spend my time on the daily chart, because the daily chart shows like a middle picture of what's exactly happening, because every candle signify the trading activities for a particular day. So as in medium term traders or day traders or long term traders, you have to always take a look at the daily chart. So we are here right now at the daily chart, and we can see the structure on the daily chart. Whenever we get to the daily chart, we also look at market structure, because it's better you look at market structure from the daily chart and also from the 4 hours, because these are the most cleanest when it comes to visualizing market structure. All right, so what can we notice? For a while, we can notice that this market was on an uptrend, making higher highs, higher lows, break of structure, higher highs, higher lows, break of structure, higher high, higher lows, higher high, higher lows, then higher high. Then it began to retrace, and in the retracement we could observe that it was changing market structure in the retracement. Lower lows, lower highs, then all of a sudden there was this massive break and change in the way the market began to flow. A lot of sellers came into the market and then pushed the dollar down. All right, and it continues lower low, lower high, lower low, lower high, lower low, lower high. It continues flowing like that. And the way I look at it from the daily, I don't count the wicks as a break of structure. I count the body close of a candle as break of structure. So if you look at this point here, before, this was the highest point before the break of this structure downward. So if you look at this wick, there was no this just came and tested it, probably a sweep of liquidity, before it continues rolling downward for a lower low, potential lower low. So right now we are in the DXY, the dollar index, and it's showing us sign of weakness in the dollar. So we're going to go straight into the 4 hours chart. We are building our case to know our bias for the dollar, and you must take note that the dollar always drives any currency pair that has the USD. So if the dollar is strong, that means Aussie dollar, GBP dollar, Euro dollar is gonna be weak. Okay, so if the dollar is selling, you expect those pairs to buy. If the dollar is buying, you expect those pairs to sell. So I don't trade the dollar, but I use it first in my analysis to know how these other pairs will cope for the coming days and weeks. So we are here now in the 4 hours chart. We can see, looking from the left, okay, sorry about that guys, you can see there was a major change in trading character, break of structure, impulsively made a correction, filled some imbalance. You can see imbalance here, then it continues downward, break of structure, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. It continues with the lower low, lower high until this point where it broke. Okay, this point where it broke. At this point here guys, take a look at this. At this point, sorry guys, there was a break of structure here. Sorry, I want to make it stick. Okay, at this point there was a break of structure, and change of character continues to the upside. But I will note something here, that if you check out this portion of the market, let me delete this, I don't like our chart looking messy. If you check out this portion of price, there were so much, it was like a rangy market, so much accumulation going on here. If you can look at it, there's so much accumulation. There was accumulation. Then all of a sudden there was a distribution, breakout, retest. You can see guys, breakout, retest, continuation. Okay, so what are we looking at currently? This is currently going on an uptrend, high low, until it got to this point again. And if you take a look at it, there was also a short-term accumulation going on here. Sorry guys, short-term accumulation going on here. Okay, there was accumulation going on within this point. Was rangy, then distribution down. You can see impulsively. Then you can see now the market is, there was a break of structure here, change of character, and it closed the imbalance. I went back straight to the supply zone. So looking at this right now, the DXY, though it is in a major point of support and resistance, okay, I don't usually trade whenever it's in this support, or I want to see a clear view of what's going to look like. I want it to either break, come down, go up before I take my decision. But right now, just looking at this, it's looking as though the dollar will show some signs of weakness, because clearly was doing higher lows, higher lows, higher. Then there was a change of character, then break of structure here. Break of structure, it went back, and a price flow, it went back, impulse, then corrective, then it's beginning to drop down, rather with this impulsive 4-hour candle. So if I am to trade, which I'm not going to trade anything right now because it's in a major support and resistance zone, I'll just be folding my hands and watching to see what more the market is going to do. But if I'm to do any trade or give any advice, why not? The dollar is looking at as though it's going to show signs of weakness. And guys, whenever dollar is weak, GBP USD will be strong, Euro USD will be strong, Aussie dollar will be strong. But right now, it's for me 50-50, because I can't see clear direction. It's in a major point of support and resistance, and I just need to stay off, respect this zone, because these zones are strong zones, and it could mess up with you, could mess around with you for a while. You just have to respect these zones, and these for me are no trade zones. I need to see clear direction on how it's gonna go. So we'll go to the 1 hour and see what's happening. You can see, guys, in the 1 hour, okay, let me just do this. The 1 hour has been, you can see this trend line, guys. Okay, let's draw it like this. I don't like my trend lines. being too close to the body of the candle. I like it at the wicks. Okay, let's use this guy here. Okay. Alright guys, sorry about that. This is trend line showing us the market has been on an uptrend from the hourly chart. Then this sharp break down and then went back to kind of retest. Perhaps it wants to continue to drop down, but it is still in the support resistance zone. Okay, it's a major highway. It's not safe to be crossing around a major highway. You don't know what is coming, so just be on our hands as we watch this unfold. So just give this market 2 or 3 days. It's going to give us more clearer direction. Maybe by Thursday we're going to see where the market wants to go long term, but this is in the major zone, and any decision it takes now is going to be for the long term. All right, so let's go. This is for DXY. Okay, we're gonna go now straight to Aussie dollar, Australian dollar. We're still gonna continue right from the monthly chart to see how the price is flowing in the monthly chart. To see the price how it's flowing in the monthly chart. We don't trade the monthly chart, but just to see a directional bias. Okay. So this has been an uptrend, began to show signs of downtrend. All right, but then take note, the last time the market came to this point, okay, last time it came here, there was this sharp rejection pushing the price away. There was so much buying pressure, and it came back, retested here, and now it's looking as though it wants to begin to pull up, at least to respect this point here. But it's also kind of in a range. It has been range bound for a while. So this is the monthly outlook. We don't do anything on the monthly chart, just to see how the market is going and flowing. So we'll go to the weekly. In the weekly, here we'll plot our key zones, key levels, and of course I don't plot key levels on candles. I go and do line, because line is very clear and you see everything with the line. So this has to come with lots of experience. Okay, we're going to choose this. Okay, on the weekly, support, resistance, turning point. Sorry guys, this seems to be a major turning point in the market. And see, from here it came down, broke up, rested on this, continued bounce, rejection, broke down. Okay, you can see it bounce here. So this is a good zone. I'm gonna clone this again. Look for the next. This one is above price. Look for the next zone below price. Okay, let's use this zone here, because right here, so it tried to go up, it stopped, came down, broke. Next time it came here, it respected it. So let's use this as our 2 major zones. Don't forget, one zone above the price, another zone below the price. So these are 2 important. Of course, you can plot other zones in the future, but then these are for now the most 2 important 2 zones. So we'll go back to the candle. All right, so now we'll see the major turning points in the market, although they are minor levels, but these are the major levels in the market. Go to the daily and then look at how we're going to see market structure, and then if there are any minor levels, we'll also plot minor levels also. Okay guys, you can see the market structure has been showing lower lows, lower highs, lower lows, lower highs. The price has been flowing down, got here, began to show change of character, change of character until there was a sweep of liquidity here. Don't forget, guys, I do not consider a candle week as break of structure, change of character. Okay, like this, you can see they just sweep of liquidity and it continues to go down. So we are in this, from the daily, you can see that it just swept liquidity and continues to go down in this very large range. It's a large trading range. Okay, it's a large trading range. You can see the markets came down, broke this structure down. There was no substantive retracement to give us a lower high. It just went down. Then when it began to go up, it went back to 100% retracement, and now it's beginning to flow down again. And best believe it's gonna drop at least to this point or break this. So all targets are for this week low here. So right now, let's take a look at this point and this zone of price to have an understanding of what the market is talking about in recent price. So while it was retracing up, it was showing, okay, this is just it. Let's go to the 4 hours. You're going to see a clearer picture in the 4 hours. Okay, here we are, the 4 hours time frame. Do not forget, we are in this large trading range, and we can see while retracing up, it was giving us higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, until now, where there was this break of structure. We broke this lower low here, broke this structure. Now we are going to measure this with our Fibonacci to see the level of retracement, if it's in a premium or a discount. Okay, so guys, you can see this strong leg down, and now it has retraced to the 61.8 golden ratio of Fibonacci. All right, so what we expect now is for the market to begin to roll over, most likely give us a change of character and begin to trade down. So my expectation for this market now is for the market to at least break this low from here downward. Okay, so my expectation is for this market to at least target this low. So my bias for Aussie dollar in the coming days is for it to drop. And if you measure the pip count, it begins to, whenever there's a change of character, it's about 100 pips, 100 and more pip drop. So we're not going to trade now. We're not going to enter a trade now. We're going to wait for a change of character, break of structure, retracement. Then we enter our trade for a sell, and hope that the market drops down. There was a news this day in the morning, interest rate news for the Australian dollar, that caused this high impact move. Let's take to the 1 hour. That caused this move high. So this is our bias for Aussie dollar. Let's go straight to the next one, which is GU. Monthly. Start from there to begin to build our case, to see how the market is flowing. Okay, the market has been flowing on a downward trend, downward trajectory for the longest. Go to the weekly to plot our key zones, and while plotting key zones we use the line chart, because for me the line chart is the best while plotting key zones, key levels. So one below price and one above price. So the most recent key level below price is this, and the most recent key level above price is is this. So you can see the rejection, break, respect, rejection, break, rejection, and this is where it is, prices in between these two key levels. So let's now go back to the candle. Let's go to the daily chart to see market structure, how the market has been flowing, and we can see the market has been flowing uptrend after this major downtrend, flowing uptrend. Okay, there's a break of structure somewhere here, show that the market has changed direction from a downward trend to an upward trend. It respected this zone. There was a support here that made it difficult. Okay, this can be seen as another minor level. So the market is currently trading on this minor level, and there's nothing we can do on this pair except there is a clear direction on what to do. If the pair wants to go down, because Aussie dollar is going down and GBP should follow suit. Okay, so if this is going to go down, it's going to show me a clearer picture, guys, clearer picture. But if you go to the 4 hours, you're going to see that there has already been a change of character for the downside. Change of character has already happened here. Up, down, up, break, retest, but there's still some imbalance left to be filled here. Maybe it's going to fill it now, maybe it's going to fill it later. But if we're going to go for this down, we have to wait for this price to at least fill this imbalance, which I can see here, fill it up, and then continues to roll down. But for now, it's in a major level, so we do not trade on the major levels. Okay, so the last pair we're going to look at today, sorry for this quite lengthy video, is the euro dollar. Euro dollar is just the opposite of DXY. Okay, as you can see, it is clear. We have done analysis on DXY, so if you want to see the opposite of this, just start from the first analysis we did on DXY. We're going to see exactly how euro is, because euro is just the opposite, nothing more, nothing less. So we can see it has been on this downtrend in the 4 hours. It has been on this major downtrend for the longest. You can see it. Then there was this break. Sorry guys, there was this break, which is also break of structure upward. Then you see markets retrace down. So guys, what am I expecting for euro? I'm expecting for euro to at least make another higher high here, because it has retraced. And if you calculate the retracement using the fib tool, you're going to find out that the market has retraced 50%, well over 50%, guys, well over 50% of the fib level. Okay, that's how the market has retraced. You can see it. High, low, lower, low, lower, high, lower, low, lower, high, lower, low, break of structure, retracement to 61, almost 78, almost 0.768 fib level. So right now I'm expecting euro dollar to at least make another high here. Okay, so this is my expectation for euro dollar. Maybe it goes down, sweeps this liquidity at the bottom here, then target here. So we'll just keep an eye on this. Let's just delete this. I don't like my chart looking messy. Let's delete this trend line. Okay, so that's it, guys. This is what my outlook for this coming days is in the market. If you like such contents and you want it to be coming your way more often, please hit the subscribe button, like, also hit the post notification bell and comment for the algorithm. So until I come your way next time, is Inner Eye Forex signing out. You guys have a much profitable trading